We are updating the VIX, which is a volatility index to the S&P 500 index. One of the things that we're going to show you, and we have many of these on our website, talking about fear. When people are down here, there is no fear. Markets with people are very, very complacent. Nothing can go wrong at all. Nothing, ever. But when we get over here into calendar 2016, we hit this high, meaning that when this VIX go up in value, it means all your indexes and stocks are going lower, as they will be going low, a lot lower when we have broke all the way back up here to 30. And yes, on a daily level, we started to see a little bit of pullback. This is where the fear has gotten all the way back up here. This is when everything and all of the fear, basically what we have right now is we've had a gap up in the fear, and that was a significant gap. And the volatility index is based on this index right here. So when the S&P was going straight down right here, that volatility index was going straight up as it was. And this is those daily readings as we see it now based on the relevancy of the fear factor. Okay, here we are with the weekly fear indicator. Back when we hit fear up here, markets were totally oversold and there was a lot of fear. And that was the time to go long the market. When everyone else was shaking in their chair, it was time to buy. And basically, as the fear indicators go down, that means one thing. Markets have put their bottom in the indexes, and indexes will go higher. We have hit 30 so far, and there is still, in our view, a lot more room to go higher in the fear factor. This is this week of January, and we started this week and this week, and we're starting a new week. When we put a top in the fear indicator, that will mean that the market has a low that is put in the fear indicator. Here's the monthly one, and it's called the Volatility Index, the VIX. And you can see on this monthly one, this one monthly bar so far has been going straight up. And that means that if we get more fear, and we're going into earnings season, you're going to what? If the fear goes higher, you're going to continue the selling. This is a monthly fear indicator that people don't know how to apply with. So right now you're given that on a weekly, and you're also giving the fact that the way that we look at things, this is the actual index itself in the S&P going straight down in calendar 2016. And as that was doing that, you were going higher in the fear. The higher it went, the more selling that went down. So what do I do in the option market? It's very simple. My put options are going to continue paying versus the call side of the market. And yes, short term we're oversold, but this fear factor has to even go higher. This is not high enough, and this is a monthly one. Volatility index equals S&P 500. You don't think so? It's right here. Here it is. S&P going straight down. Here it is. Fear indicator, the VIX going straight up. The fear indicator. The fear indicator goes up, we go lower. When this comes down, we put a bottom in and they go up higher. Welcome to the fear indicator and the volatility index. I've showed it on all time frames. And once again, there is not enough fear. Fear has to play out at a much higher volatility rate when that comes. I will tell you it will have to go above 40 and we'll have to get a blow off top sometime here in calendar 216. We said the super bubble in 215 it was 215 and 2016. It was a 24-month cycle. We've started the next 12-month cycle. We're in it right now. We're in it now. And just let's all do one thing. We will help you manage your risk.